In this video, we're going to take a look at a company called Fortitude Gold Corporation, ticker FTCO. This is a stock that I'm asked about pretty regularly over on Patreon, so I think it makes sense to go in depth on this company. It currently offers a dividend yield that's close to 10% and it pays monthly distributions. So it's a pretty appealing investment from an income perspective, but there's a good amount of considerations that need to be taken into account with this company. So let's go ahead and take a deep look at this stock to see if it's a worthwhile income holding. Fortitude Gold, according to their website, is a junior gold producer with operations in Nevada. They state that their goal is to grow organically, remain debt-free, and to distribute substantial dividends. This company is a spin-off of another gold company by the name of Gold Resources Corporation. GRC is a gold and silver producer, developer, and explorer with its operations centered on the Don David gold mine in Mexico. In 2018, the company's CEO wanted to focus specifically on the potential gold resources at the Isabella Pearl deposit in Nevada. In 2021, this company went public, and today they trade in the over-the-counter markets. Now, Fortitude Gold is a pretty different company compared to what I normally cover, because there aren't too many raw material companies that have a worthwhile dividend policy. Most don't pay dividends, and the ones that do only pay annually or semi-annually. So there's a few things that income investors will need to keep in mind. Unlike REITs, BDCs, and many other high-yielding investments, Fortitude Gold is not required to pay dividends. They can freely reduce or eliminate their distributions at any time and for any reason, and any kind of dividend growth is something that's very hard to predict with these companies. Fortitude Gold is also a very small company, hence why it trades in the OTC markets, and they only have a market cap of around $100 million. But fortunately, with a beta of only 58, it's not nearly as volatile compared to other OTC stocks. Likely the biggest reason so many people are interested in this company right now is because of rising gold prices. Last week, the price of an ounce of gold reached $3,000 for the first time, which is largely being blamed on the stock market panic that we've been experiencing. People view gold as being a safer investment during rough economic conditions, which is why people have been pouring their money into it. According to goldprice.org, the price of an ounce of gold has increased 38.15% in the last year. Compared to the S&P 500, it's performed significantly better than the index. So the idea of investing in a company that produces gold and offers a 10% dividend yield sounds pretty appealing. But the one-year share price performance of FTCO is negative 10.33%, so there's obviously some kind of disconnect going on. Why wouldn't the market be more optimistic about the future of this company since the materials they mine are skyrocketing in value? There's a lot of variables when it comes to analyzing a mineral company. There's political risk, as these businesses require permits and face a lot of government regulation. There's the chance that one of their properties might not either have or be able to produce as many resources as they first anticipated. So there's so much more going on than just gold prices. This company currently lists 5 properties that they own in Nevada's Walker Land Mineral Belt. These properties are the Isabella Pearl, the Golden Mile, East Camp Douglas, Mina Gold, and Country Line. However, only one of their properties is currently producing, which is their flagship Isabella Pearl. It's a pretty large area that expands for more than 6.2 miles, or 10 kilometers, and in total is roughly 10,434 acres. All of these other locations are currently dealing with red tape. Their Scarlet North mine is currently awaiting permits, and their Country Line location is their next targeted mine that's also in the permit phase. In terms of opening new mines, I will say that things are looking more positive now with Trump taking office. Unlike the Biden administration, which was a lot more concerned about the environmental impact of mining, Trump definitely won't be as harsh. But the amount of red tape mining companies have to face is pretty significant, as you can probably imagine. According to this article from the University of Arizona, it can take up to 12 years to start production on a mine, so who knows where gold prices will be at that time. Fortitude Gold, though, has been in this process for a long time with their other locations, so it definitely won't take 12 years from today. But let's actually look at the financials of this company. On February 28th, this company released their full year 2024 production numbers and their Q4 results. The report was a mixed bag, and it caused the share price of FTCO to fall by nearly 10%. First, they provided updates on their properties, which is what I went over earlier. They're still in the process of getting permits to start production on the County Line. In 2024, they spent $12.9 million on exploration costs, and they said they intend to reduce those costs in 2025 to hopefully focus on getting the County Line started, still awaiting permits. So they do appear to be making progress, although slow, with these other future mines. They also said that Trump should have a big impact on their sector going forward. For the year ended December 31st, 2024, the company sold 15,825 gold ounces at a total cost after byproduct credit of $827 per gold ounce and a realized 2024 average sales price of gold at $2,371 per ounce. The company recorded revenues of $37.3 million and a pre-tax net income of $1.4 million. If you look here, you can see that the production slowed significantly in 2024. The amount of gold they extracted and sold was less than half compared to the previous year. Compared to their previous years, 2024 saw a sharp decline in revenue. That's despite gold being at an all-time high and silver being close to its all-time high. Moving on to their statement of operations, you can see their revenue was $37 million at the top, and then moving down, they reported mining gross profits of $18.3 million. General and administrative costs were higher in 2024, and the majority of their other expenses didn't go down as much, including taxes. So at the end of 2024, the company reported a loss of $2 million. Over on their balance sheet, a concern I have is that this company blew through a good chunk of their available cash. Quarter after quarter, this company's cash has been declining. It's roughly half of what it was in September of 2023. In fact, the majority of their assets went down in 2024, except for their leach pads, which are these things. They're structures used in mining to extract metals from ore through a process called heap leaching, where ore is placed on a lined pad and treated with chemicals to dissolve the metals. Only with a raw materials company would you ever see something like this on a balance sheet. It makes sense for it to be there since it obviously has value. But now let's take a look at their free cash flow, which is the money they have left over after paying expenses. This is the money the company earns in the quarter to do things like pay dividends or buy back shares. Not surprisingly, judging by their 2024 results, this number has been negative for all of the previous year. So all things considered, this company isn't reporting great financial results. They haven't been earning enough to continue paying their dividend at their current rate, and the cash they have is consistently declining. In 2024, they paid $11.6 million in dividends, and they now only have $27 million in cash and cash equivalents. Assuming things don't improve in 2025, they can keep their dividend for another year if they do feel like running through all their cash. But reading this report, it doesn't go into detail as to why production slowed down so much last year. As of right now, though, they are still paying dividends and their track record is still perfect. But I also don't like that this company is not very transparent when it comes to how they determine what their dividend is going to be. There's no information on their dividend policy online, so I don't know why they're paying 4 cents a month and what's determining this amount. It is possible that last year was just a particularly harsh year, and now that the mining sector will likely get a big boost from Trump, 2025 could be a much better year for them. 2025 is going to be this company's most important year. If it's going to be another year of lackluster production, the dividend is going to be in danger. If you're really optimistic about Trump easing the red tape for new mines, then I could see the case for being bullish with this company. But let me know your thoughts and if you're thinking about buying it or if you already hold it. But with that being said, that's going to conclude today's video. If you'd like to connect and also see what's inside my own personal dividend portfolio, then feel free to check me out over on our Patreon, where you'll receive updates and be able to talk to me and other higher yielding dividend and income investors. But with that being said, thank you all so much for watching today's video, and until next time, take care.